Welcome back, Alpha Hunters. Hope you had a fantastic weekend. It was a long weekend. I slept in a little bit on Friday, Saturday, and Sunday, and took some naps, because, that's what you do after you eat a lot. But we're going to kick off this week with another Your Stock, My Plan, and we're looking at Marriott International, MAR. And one of the reasons why I did want to start out looking at this, and I'll talk about this a little bit later in the video, is Delta Airlines had great things to say last week about travel stocks. So I wanted to cover some travel stocks this week, or look at a travel stock this week. And Marriott is one of those that is looking really good. A little bit more clear trend to the upside than some others. So that's why I was looking at it. But we came up with a plan that can generate an annualized return percentage of 371%. Now, I also do go into another way you can have some upside exposure to really have some skin in the game over the long run. If these things really start breaking out, is not a bad way to go at all. If they really start breaking out to the upside, then we could definitely see some massive gains in MAR. I don't really cover that in this annualized return plan right here, this 371, but I do talk about how you could potentially look to set that up and how you can use your short-term premium that you're collecting to roll that into paying off some long-term call options. Okay, so it's a really good way to go about putting some skin in the game. And you know what? You're not putting up as much capital in the long run. But really, it's up to you and how you want to do this and what you are thinking on MAR and maybe some other stocks like this. All right, here's the analysis. Enjoy the video, guys. Okay, so let's start on that process to get to that end result with Marriott. So just understand where Marriott's at right now. Obviously, the leisure companies, travel companies, they've had a lot of issues over the past couple of years. So just in kind of knowing that, their downside really hasn't been obtained because they haven't really seen the upside over the past 2 years like we've seen in other stocks. So to me, that kind of just says the downside is pretty limited. That is why I do like some of these names right now. And really, they've fallen off probably a lot of people's radars because they had fallen off of mine. And the reason why I'm going to talk about Marriott this morning is quite simply because Delta Airlines last week, DAL, had just absolutely amazing earnings results. And it's not so much the results, but what they said in the results. They basically said that they are seeing very strong demand from travel. Okay, they're seeing all-time demand for consumers wanting to travel. And obviously, if you're going to travel, you're going to have to stay somewhere. So stocks like Airbnb or other hotel names would be pretty good, probably look good to look at, maybe some cruise lines. But this morning, we are just going to look at Marriott, MAR. So let's go ahead and look at a 1 month chart, just kind of get an understanding of the longer term trend. And we have a pretty good long-term trend, actually, just right up through this area. Very, very clean. You can even say it's right along the 50 EMA on a monthly. Pretty good also. But that looks to be a pretty solid line right there that it definitely maintains. It did get below it, obviously, during the COVID, but pretty much everything broke trend lines in COVID. So that looks pretty good. And it is actually pretty much at the high of this current chart now. Let me see if I can zoom out here, see if, yeah, okay. So that is pretty much at its all-time high. That definitely says very strong things because that looks like it's closer to the all-time high than, say, the regular market like the SPY. Yeah, the SPY is not nearly as close to the all-time high as Marriott, which is really weird because usually you see leisurely stocks like this, travel stocks and like hotels, they will pull back faster as the market goes into a recession phase than the market. So this definitely leads me to believe that leisure and travel could actually be a bullish area, potentially going forward for the next few to several months. We'll just have to wait and see on that, but definitely doesn't look like a weak area. So let's get back and look at the daily. And the daily looks like it has a pretty good range here. Up in this area, nice little upward slope there. And then we have another one kind of like right up in through here. Yeah, something like that. It doesn't really like to break out above this upper trend line because the 2 times it kind of has done that, it has pulled back. But anything around this line, I would definitely be a little bit cautious. Now, it has been consolidating here at its all-time high area. So it might just be waiting for like its real breakout, and it might potentially be happening soon. So we'll have to wait and see a little bit on Marriott, but it doesn't mean that there are not profitable trades to make. And I do like the bullish case. We just need to let it set up a little bit better and probably get above this, pull back, and then continue higher. If it actually did do that, something like this, to where you did get this breakout and then it looked like it was coming back down and it just kind of bounced off this and just kind of kept going higher. If it got something like that, I would look to be a little bit more bullish potentially than what we're going to look at. But you can definitely do like some bull verticals, like bull call verticals, bull put verticals, you know, stuff like that. Wouldn't look too bad. But I'd say for here and now, potentially maybe not, just because we are at the upper end of this relatively shorter term channel that, you know, we have definitely seen some pullbacks here before. But we have seen strong volume over the past 2 days, and not even on their earnings, but just a reaction from Delta Airline earnings, DAL. So that is very good to see that DALs and what they said in their earnings has impacted other areas of travel. So one of the first things that kind of pops off in my head as I'm looking at this, and since I did mention limited downside, that very much I've been covering a lot lately, and just mostly because there's been a lot of situations where the wheel strategy has been one that where you can make money and you can generate cash flow, but you're doing it on a stock that looks like it has limited downside. And that is the most important thing when you do the strategy like the wheel, because you're going to put up a lot of capital with potentially owning the stock that you don't want to have the stock potentially going down to zero. And this looks like one of those cases that it does meet those factors of not losing a lot of value. That's a key aspect when you do the wheel. So I'm even going to move this trend line up to roughly here, because I'm kind of looking at it, and really we have this trend line also. We've gotten below it a few times, but it was so quick that usually by the next day or two we were back above it. So, but we've hit off this also 3 other times and just bounced off it. So I do like that for a trend line. So this is a very clear kind of trend area. We've gotten above it like twice, but came right back in it. Got below it twice, but came back in it. And we've kind of bounced off it multiple times. So we're just in this trend area and we're just kind of waiting for it to potentially break out or break down. And so besides the wheel, the other thing that I can kind of think about, so we do have this clear trend area, is potentially doing bullish kind of vertical options out here. You can do bull put verticals, let the stock just kind of continue to trend up in this direction, but you do them out here, collect some premium. So we can look at some stuff like that, maybe some bull call verticals. I do like doing bull put verticals a little bit more, but either way, it's roughly the same thing. All right, so let's look at some options. I want you to leave a stock in the comments below, and I'll come up with a trading plan. Okay, so we got Marriott here, MAR, and we definitely do have weekly options, so that's good. They go out roughly 6 weeks, 6 week, yeah. And then they have Jan 23, and they do have Jan 24 leap options. So that also gives us some long-term flexibility. Depending upon how bullish you want to be, what you could definitely do is do a poor man's covered call where you go out and you buy a long-term call option, and then you just sell the shorter term call options kind of against that to just bring in some premium, help pay off your longer term call option, and that way hopefully you can work yourself to getting a free trade out of it, especially on a longer term trade like this. That would be amazing. But you got a 185 strike, and you do have a 185 strike here on the shorter term. You have a 185 strike here on the shorter term. So you could possibly do the 185 strike on the long term and sell them on the short term. But I wouldn't want to do that so much here on this one. I'm just saying that is a possibility. It's actually a very good possibility. I'm not looking to do that for this one or show that off here. But if we did a bull put vertical where we sold the at the money put option somewhere out in the future, we'll have to look out into June, see what that looks like, and then bought the strike below it. We have to see what that looks like, but that could be a very good possibility and potential. So let's go ahead and out to May 27th. Okay. And then if we, and it's currently trading around 180. So 180 is pretty much the at the money strike. And if we, okay, if we sold that, I'm gonna increase this in size. So if we sold that and then bought a put, and the funny thing about if you do a bull call or a bull put vertical, you actually buy the same strike and you sell the same strike. It's kind of funny how that works out, but that is how that works out. So the way this bull call vertical, so it's kind of dependent because they do have a little bit wider spreads. There's one thing I was noticing about the MAR options is the spreads. They're not super liquid. They have pretty wide bid-ask spreads. You can still make this work. You can still do some profitable things, but I wouldn't be looking to trade a lot of MAR options, okay? But as far as, you know, making money off of MAR options, because the stock and the company looks like it's doing pretty good, still can make money here, okay? So that's kind of the name of the game. And if we did go out to, I'm going to just kind of mark something real quick. If we did go out to May, what was that expiration date? May 27th. So May 27th, all the way out here. That is kind of where we were looking for it to be above by the end of that expiration. And that's roughly in the middle of that channel that we kind of laid out before. So I would say in this case, it's kind of a coin toss, right? You know, it could be above, it could be below. And, you know, when we're trying to make money, I want a little bit better of, you know, than a coin flip on my outcome on where the stock's going to be. So I would say if you're going to do anything, I'll even maybe go a little bit further down. And they do have every 5 points is the strike price. So with every 5 points being strike prices, you know, we could go to the next lower, maybe strike vertical and look and see what that looks like. So if we did sell that one, we did buy that one, we'd be able to bring in $1.60, and it looks like it's much lower in that channel at that point in time to where I'd say, yeah, you know what, that actually does look pretty good. But if we were looking to bring in, we'll say $1.50, you know, we can get like that perfect $1.60, but if we could bring in $1.50, okay, and then, so let's say we were able to bring in $1.50 with our potential risk at this trade at $3.50, that would be roughly a 43% return, okay? So if we're looking to bring in a 43% return, and that looks to be over 6 weeks, so what we'll go ahead and do is times this rate of return by 52, and then we will divide it by 6, and that would be roughly a 371% return annualized, okay? I do like doing the annualized because then I can compare different trade timelines and see which one's giving me the best risk reward for an annualized return. So this is an annualized basis return, and if you did keep doing this, you could kind of probably work towards this 371. But getting a 43% return over 6 weeks, really not a bad use of your money at all. Now, another thing that you could potentially do, let's say you're getting a little bit more bullish on some of these airline stocks. Now, I wouldn't be maybe bullish today, and I know you guys are probably gonna see this video at the end of the day today, but when you see it kind of like in the upper part of this channel, maybe wait for a day or two for it to settle out, kind of go sideways, especially after these 2 days, where it went from the bottom of the channel to the top of this channel. So wait for a couple days, wait for it to settle out, the volatility to kind of come down a little bit more in the options. And let's look then and see if we can get a longer term, potentially something like January of 23, maybe like a call option. And you know, there's a lot of different ways you can do this. I do like doing free trades. So if I can pay off, you know, potentially a free trade sooner, that would be great. So let's look and see if we can do the 190s. So let's see if the market just opened, so the prices might move around on us a little bit. Not a big deal. So let's look and see if, okay, so we got this 190 in January 23. So we can look, and if we were to pay a little bit of this down, and maybe we got it down to where really we're just into this trade for $5, so we can see how many weeks we got left. You know, if we're in April and we got roughly, so we'll say we're through April. How about that? We'll just say we're through April, so we're kind of doing some easier math here. And then we go ahead and, you know, 52 divided by 3, that gives us 17 weeks. So that's how many weeks we have already gone through. We've already gone through 17 weeks in the calendar year, roughly. It might not be exactly 17 weeks, but we've gone through roughly 17 weeks. So obviously then we take 52, then minus it by 17, and we have 35 weeks left until the end of the year. You can tack on a couple weeks because we'll go a little bit into January. So we'll say we got 38 weeks until that January expiration. So if the option strategy that we're doing, where we are selling and collecting premium, and that takes 6 weeks for us to fully realize that, how much could we potentially pay down of that leap for the January of 23, right? We're looking to buy potentially an $18 January 23 195 strike call, okay? So how you would want to do that is say, okay, we got 38 weeks here. We're looking to bring in, what did we have back down here? We were looking to bring in $1.50, but we're looking to do that every 6 weeks. So how many times would we be able to do that? So we'll just divide this 38 divided by 6. Okay, so we would be able to do this roughly 6 times. We'll do it 6 times, not 6.3333 times, but we'll do it 6 times, and then we'll just say, okay, I'm gonna clear this out. 6 times 1.5, because we would be able to do this 6 times. We'll be able to bring in the premium from the bull put vertical. So we'll be able to bring in $1.50, and we'd be able to bring in $9, okay? So if we're looking to bring in potentially $9 over the course of the rest of the year, that makes this trade roughly a $9 trade. So we would basically cut our risk into this trade in half. So that is another possibility of what you could potentially do if you are a little bit more bullish on MAR. I'm kind of do like being a little bit more on the bullish side, but I do want to be bullish as it gets clearly above this channel and really starts to break out. I would be game for a strategy like that. You can be a little bit more aggressive. But even if you did go with the 175 to 170 bull put vertical spread, it's not a bad way to go. It's really good. You're going to generate quite a bit of returns. You don't have to shoot the moon every time. And really, the way we've been lately in the market is not really the time to shoot the moon. So, you know, just look to protect capital and just kind of bring in some cash flow until the market gets back to being clear on what it wants to do. Okay, but I think the May 27, the 175, 170 bull put vertical is a pretty solid way to go. And you're bringing in, like we had mentioned before, an annualized rate of return of 371%. So that is a pretty good way to go. It's a lower risk way to go, in my opinion. You don't have the full amount in the upside, but you know what? You don't need the full amount in the upside. Just look for clear wins right now. This looks to be like a clear win. I don't really see Marriott pulling back super hard, especially over 6 weeks. It might pull back a little bit as over the past 2 days. It has had quite a run, but over the next 6 weeks, I think this will be okay, and it might even potentially start to be looking for a breakout to the upside. So I do like it. I think it'll be okay. I think you'll be all right in this one. And if you do want that, have a little bit more upside skin, you can definitely go out to like a January 23 or potentially even a January 24 call option. Now, we didn't look at the January 24 call options, but we did look at some of the January 23s. And, if you do want to say, hey, you know what, I'll buy one of those while I sell and bring in some short-term premium, that is very much a great way to really have some skin in the game and, bring in quite a bit of return on the long run if it really starts to work out in your favor. So hopefully you learned something, you saw some flexibility, definitely saw a way to potentially, roll this into your trading plan, potentially going forward, and some key levels to watch. Alrighty, take care, Alpha Hunters.